Welcome back, everyone, to the Deep Dive. Ready for another fascinating journey into the world of business and finance.
Always ready to dig in.
Today, we're taking a close look at Bajaj Consumer Care Ltd's second quarter performance for the fiscal year 2025. You're probably looking for a clear picture of how the company's doing and what stood out this quarter, and we've got you covered.
Absolutely.
Our sources for this deep dive are the company's investor presentation, their unaudited financials, and the auditor's review report, all fresh from November 11th, 2024.
Straight off the press.
But here's the interesting part. Even though the report's brand new, it actually covers the quarter ending September 30th. So we're looking back a bit, which makes you wonder, what can we learn from this little time warp?
It's like getting a behind-the-scenes look, seeing what the company knew at that specific point in time.
Okay, so let's unpack this time capsule. What's it telling us about Bajaj Consumer Care's performance?
Well, the first thing that jumps out is the top-line decline. And we see this across both their standalone and consolidated businesses.
Decline. That doesn't sound too promising.
Yeah, not ideal.
What are the numbers telling us specifically?
So standalone top line is down 1.4% year-on-year for Q2, and it's a steeper 5.3% for the first half of the fiscal year. Consolidated top line shows a similar trend, decreasing 0.5% in Q2 and 5% overall for the half year.
Okay, a bit of a stumble out of the gate. But I'm getting the feeling there's more to this story, right?
You're absolutely right. Despite the overall dip, certain product segments and strategic initiatives are showing some real strength, bucking the downward trend.
Okay, now we're talking. Let's hear about those bright spots. What products or segments are driving this growth?
One standout is their Almond Drops line. It's not just hair oil anymore, they've expanded into skincare too. This range has seen an impressive 33% growth in the first half of FY25.
Wow, that's significant.
It tells me they're not afraid to innovate and tap into new consumer desires. Those looking for natural and premium personal care products.
That's a smart move. So they're not putting all their eggs in one basket, so to speak.
Exactly. And while their flagship product, the Almond Drops hair oil, did experience a decline, they've strategically built up a multi-pronged approach to hair care. Their 100% pure coconut oil, for instance, is performing well, demonstrating resilience in that segment.
Makes sense. Diversification seems to be key for them. What other areas are showing promise?
Another area worth highlighting is their impressive growth in sachet sales. We're talking double-digit growth here.
Interesting.
This points to their successful penetration into a market segment that prioritizes affordability and convenience, especially important in a challenging economic climate, right?
Absolutely. So they're catering to a wider range of consumers with different needs and budgets.
Yeah.
And you mentioned strategic initiatives. What are some of the key moves they've made that are contributing to these positive developments?
Well, one clear initiative is their focus on new product launches. They've introduced Bajaj Gold 100% pure coconut oil, for example, and they've even rolled out new formats for their Almond Drops hair oil, keeping their offerings fresh and relevant.
So they're responding to shifting consumer preferences.
Precisely.
And it's not just about products, they're also shaking things up on the marketing front.
Yes.
They've jumped on the programmatic advertising bandwagon, haven't they?
They have.
Reaching a wider audience with more focus, especially where traditional media might not be as effective.
That's a smart move.
Anything else they're doing marketing-wise?
Well, they're also tapping into the power of influencer marketing, which seems to be working well for them, judging by the buzz they're generating online. And they're doubling down on digital marketing, particularly in Bangladesh. Think 9.7 million people reached and 20 million impressions in Q2 alone.
Wow, that's quite a digital footprint. Clearly, they're embracing new avenues. So, while there's an overall top-line decline, digging deeper reveals a company that's responding to market dynamics and investing in areas with high growth potential.
Absolutely. It's like they're strategically positioning themselves for future success.
Okay, so how are these strategic moves playing out in their various sales channels? Let's start with their general trade performance.
Okay, so general trade is a bit of a mixed bag. It's showing a mid-single-digit decline year-on-year. But here's the interesting detail. Rural markets are outperforming urban areas within this channel.
Really? That's surprising. Why do you think that is?
Well, it suggests that consumption patterns and economic conditions are likely at play. Maybe brand loyalty is stronger in rural areas. Or perhaps urban consumers are more sensitive to price fluctuations. It highlights the importance of market segmentation and understanding the unique dynamics of each region.
You're right, a one-size-fits-all approach doesn't cut it anymore. Now, what about their other channels? How are organized trade and international business performing?
Organized trade is doing quite well. registering a healthy 10% growth year on year. Within this category, modern trade and e-commerce are the key drivers, with e-commerce showcasing particularly impressive growth at 32%.
It seems their embrace of the digital marketplace is paying off. And what about their international ventures?
Well, their international business is the star of the show, boasting a remarkable 36% year-on-year growth in Q2. The Middle East, Africa, and Bangladesh markets are leading this charge.
Wow, 36%. That's impressive.
They achieved 103% growth in Bangladesh alone. They've also added over 100 stores in the UAE, showing a multi-pronged approach to international expansion.
It's fascinating to see how they're adapting and evolving, facing challenges head-on, but also seizing opportunities and investing in their future. There's one initiative I'm particularly curious about, Project Arrowhand. They mention it in their report, but what exactly is it?
Project Arrowhand, this is all about revitalizing their general trade performance. It's a bold and comprehensive effort to revamp their route to market. Imagine them completely overhauling their general trade engine, from expanding their reach in both urban and rural areas to optimizing their organizational structure, even revamping incentive structures for their sales teams.
Wow, that sounds like a major undertaking. Are they already seeing any results from this ambitious project?
They're in the midst of a pilot implementation in two key states, Uttar Pradesh and Madhya Pradesh. And the initial results are promising. They've significantly ramped up their direct coverage, adding new sales representatives, and they've even implemented a weekly servicing schedule for high-potential outlets in key towns. It's a big investment, and they're betting big on its success.
It's impressive to see that level of commitment. It really shows how seriously they're taking the challenges in their general trade segment.
Exactly. It speaks to their long-term vision for this channel.
And what I find really interesting is that they're not just throwing money at the problem. They're taking a strategic, data-driven approach.
Absolutely. A good example of this is their focus on geotagging and geofencing their outlets, particularly in urban areas.
Geotagging and geofencing. What exactly does that mean, and how does it benefit them?
Think of it as creating a virtual fence around their stores. By geotagging, they have precise location data for each outlet. Geofencing then allows them to ensure that orders are taken directly at the store location. This helps prevent fraudulent orders and ensures the accuracy of their sales data.
I see. So it's all about improving data integrity and operational efficiency.
Exactly.
It's behind-the-scenes moves that can have a significant impact on their overall efficiency and decision-making.
Oh.
So to recap, we've seen a mixed bag in terms of overall performance, declines in some areas, but impressive growth in others. It seems like they're facing challenges head-on, but are also making bold moves to adapt and evolve.
You've summarized it perfectly.
Now, before we dive into their financial performance, there's another aspect we need to consider, and that's their commitment to environmental, social, and governance factors, or ESG as it's known.
Yes, ESG. It's become crucial when assessing a company's long-term sustainability, both in terms of their environmental footprint and their societal impact.
Absolutely. So what are some of Bajaj Consumer Care's notable ESG initiatives?
Well, they've been making strides in resource optimization, focusing on reducing their carbon intensity and water consumption.
That's great to hear. Resource conservation is more important now than ever. Have they set any specific targets in these areas?
They have. Their goal is to slash their carbon intensity by 25% within 5 years, starting from FY22. And for water consumption, they aimed for a 50% reduction from their FY22 baseline within 4 years. Ambitious goals, but they're making progress. In terms of energy intensity, they've already achieved a 20% reduction from their baseline.
That's fantastic. What about their water consumption target?
Now, this is where things get really impressive. They've actually become water positive.
Water positive. That sounds amazing. But what does it actually mean?
It means they're replenishing more water than they consume. In fact, they're recharging a staggering 500% of their annualized water consumption. They're not just reducing their impact, they're actively giving back to the environment.
That's incredible. They're going above and beyond to ensure their operations are sustainable.
Exactly. And their commitment to ESG goes beyond just environmental initiatives. They're also actively engaged in various social responsibility programs, like their sustainable agriculture programs in villages, promoting natural farming techniques and training farmers on rainwater harvesting.
So they're taking a holistic approach to sustainability, addressing both environmental and social aspects. It's not just lip service, they're putting in the effort.
They are indeed. And their efforts have earned them recognition. They've even won awards for their Quality Circle initiatives, which are teams focused on continuous improvement within the company.
It seems Bajaj Consumer Care is making a conscious effort to be a responsible corporate citizen. Now, I know you're eager to delve into the financials. So let's take a closer look at the numbers and see how these various factors are reflected in their performance.
All right, let's break it down. We'll start by analyzing the standalone expense trends. One key area to look at is the ratio of expenses to sales. Here we see that employee costs, as a percentage of sales, have actually increased. In contrast, advertising and sales promotion expenses have decreased, while other expenses have seen a slight uptick.
Interesting. So what could be driving these changes? Why are employee costs up while advertising costs are down?
It's a great question. It suggests they're making strategic shifts in how they allocate resources. The increase in employee costs could be due to several factors. Perhaps they're investing in talent acquisition, bringing in skilled professionals to help drive their new initiatives, like Project Arrowhand, or maybe they're providing better benefits to their workforce, recognizing the importance of investing in their people.
That makes sense. Investing in their employees, especially during a period of transformation, seems like a smart move. What about the decrease in advertising expenses?
The shift in advertising spend might indicate a change in strategy. Perhaps they're moving away from traditional mass media advertising and focusing more on targeted digital marketing, which can be more cost-effective and efficient.
So they're being more strategic and targeted with their marketing efforts, which aligns with their overall approach. What about the slight increase in other expenses?
That increase could be attributed to investments in their new initiatives like Project Arrowhand or their expansion into international markets. These are areas where they're putting in the resources to drive future growth.
It's fascinating to see how their strategic decisions are reflected in their expense allocation. Now let's get to the heart of the matter, their overall financial performance. What are the key figures we should be focusing on?
Okay, so for both standalone and consolidated performance, we'll be looking at key metrics like net sales value, EBITDA, and profit after tax, along with some key balance sheet items. EBITDA, or earnings before interest, taxes, depreciation, and amortization, gives us a clearer picture of the company's core profitability. By excluding factors like taxes and depreciation, it's a good way to assess their operational performance.
Thanks for clarifying that. So, starting with standalone performance, what's the story the numbers are telling us?
In Q2 FY25, their standalone net sales value clocked in at INR 225.4 crore, which is a slight decrease compared to the same period last year. Their EBITDA for the quarter came in at INR 34.8 crore, representing 15.5% of sales. And their profit after tax stood at INR 33.2 crore, reflecting a 13.7% decrease year on year.
So we're seeing that top-line decline reflected in their profitability as well. How does a consolidated picture compare?
The consolidated financials paint a similar picture. Their net sales value for Q2 FY25 was INR 230.6 crore, again slightly lower than the previous year. Their consolidated EBITDA was INR 33.6 crore, or 14.6% of sales, and their consolidated profit after tax reached INR 31.8 crore.
It seems the consolidated performance mirrors the standalone results, with a slight dip in both top line and profitability. Is this trend consistent across a half-year performance as well?
It is, yes. Looking at the half-year performance, their standalone net sales value for H1 FY25 was INR 462.4 crore, with EBITDA at INR 72.2 crore and profit after tax at INR 71.1 crore. On a consolidated basis, the figures were INR 472.3 crore for net sales value, INR 71.2 crore for EBITDA, and INR 69 crore for profit after tax.
So the first half of FY25 has been a period of adjustment and strategic realignment for Bajaj Consumer Care. They're facing some headwinds in their core market, but are proactively taking steps to address those challenges, while simultaneously expanding into new territories and product segments.
That's a great observation. They're walking a tightrope, balancing the need to address current challenges with their ambitions for future growth.
And that makes their upcoming performance all the more intriguing to watch. Will these strategic initiatives be enough to offset the current decline and propel them back to overall growth?
That's the question, isn't it?
It certainly is. We've covered a lot of ground in this first part of our deep dive. We've seen how Bajaj Consumer Care is navigating a complex and dynamic market, making bold moves and adapting to changing consumer preferences, facing challenges head-on, but also seizing opportunities for growth. And underlying it all is a commitment to sustainability and responsible business practices. Now, let's take a closer look at their financials and try to answer that million-dollar question in part 2. Stay tuned.
Looking forward to it. It's like a Bajaj Consumer Care is at a crossroads, wouldn't you say?
Definitely a pivotal moment for them.
They're grappling with this shifting market, changing consumer preferences, tougher competition, but they're not just standing still.
No, they're taking action.
Innovating, adapting, really transforming their operations.
It's true. Standing still is not an option in business these days. You have to evolve and take risks. But let's go back to that big question. Will these initiatives be enough to turn things around and lead them back to growth?
That's what makes their journey so captivating. The next few quarters will be key. We'll see how effective their strategy really is.
Absolutely.
We need to keep an eye on Project Arahan, for instance. Will it be the game changer they're hoping for?
Right.
Can they leverage their growing international presence to counterbalance the issues in their home market? And can they translate all this into actual financial gains?
So like watching a high-stakes game unfold. Every move matters.
Yeah.
Speaking of seeing how things play out, remember how we started by talking about the delayed release of this report? What insights can we gain from that timing?
That's a good point. It could indicate a very deliberate, data-driven approach to their decisions. Perhaps they're carefully analyzing the data, assessing the impact of their initiatives, maybe even fine-tuning their strategies based on the latest market trends.
It makes you wonder, is this a sign of uncertainty or a sign of strength?
Right.
Like they're saying, we're going to be strategic and make informed decisions.
Exactly. It highlights how important agility and responsiveness are in business.
For sure.
Being able to adapt and make decisions based on data can make all the difference.
Well said. So far, we've explored their strategic moves, their efforts to address those challenges in key markets, and their commitment to sustainability. We've also looked at some of their key financial figures, but let's go deeper into their financial performance. Let's go beyond just the numbers and understand what they're telling us.
All right, let's do that. We've already discussed their top line and profitability, but there's more to uncover. Let's take a closer look at their balance sheet. It provides a snapshot of their financial health at a specific point in time.
Okay, so what key balance sheet items should we be paying attention to?
Some of the key items to focus on are their assets, liabilities, and equity. Assets represent what the company owns, like cash, inventory, and property. Liabilities are what they owe to others, such as loans and accounts payable. Equity represents the owner's stake in the company.
And how do these relate to their financial performance?
By analyzing these items, we get insights into their financial stability and risk profile. For example, a high level of debt could indicate financial strain, while a strong equity position suggests financial strength.
I see. So what does Bajaj Consumer Care's balance sheet tell us?
Looking at their balance sheet as of September 30th, 2024, we see they have a healthy cash position, with a significant portion of their assets in cash and cash equivalents.
That's a good sign, right?
Yes, it is. It suggests they have the resources to navigate short-term challenges and invest in future growth. Their debt levels are also manageable, indicating they're not over-leveraged.
So overall, their balance sheet looks pretty stable. But there's one more aspect I'm curious about: their cash flow.
Cash flow, the lifeblood of any business. It represents the actual movement of cash in and out of the business. It tells us how much cash they're generating from operations and how they're using it.
So what can we learn from their cash flow statement?
It can reveal their ability to generate cash from their core operations, fund investments, and meet their financial obligations. A strong cash flow from operations is a positive sign. It means their business is generating enough cash to support its activities.
So how does Bajaj Consumer Care do in terms of cash flow generation?
Their cash flow statement shows they've consistently generated positive cash flow from operations, which is a good sign.
That's encouraging.
It means they're not relying heavily on external financing to fund their day-to-day operations.
So they're managing their finances well and generating enough cash to support their growth initiatives.
It seems so. And by analyzing their cash flow along with their income statement and balance sheet, we can gain a comprehensive understanding of their overall financial performance.
Taking all of this into account, what's your overall assessment of their financial health?
Well, despite facing those headwinds in their top-line growth, their underlying financials appear to be solid.
Okay, that's reassuring.
They have a healthy cash position, manageable debt, and are consistently generating positive cash flow.
It sounds like they're financially well-positioned to handle the current challenges and capitalize on future opportunities.
I would agree. And their strategic initiatives, combined with their commitment to sustainable practices, could pave the way for a brighter future.
Well, we've covered a lot of ground in this second part of our deep dive. We've delved into their financial performance, looking at their balance sheet, cash flow statement, and overall financial management strategies. But there's one final piece of the puzzle we need to explore: their outlook for the future. So we've analyzed their financials, scrutinized their strategies, and really delved into their commitment to sustainability. But the big question is, what does the future hold for Bajaj Consumer Care? What kind of signals are they sending about where they're headed, and what can we expect in the coming quarters?
Well, we don't have a crystal ball, of course, but there are some hints we can pick up from their investor presentations, management commentary, and just overall industry trends.
All right, let's play detective then. What clues have they given us about their future plans?
One key area they've emphasized is innovation. New product development.
Right.
They're always looking for ways to refresh their products and introduce new offerings that consumers want.
So we might see some more exciting product launches, new line extensions coming soon. Makes sense, especially after the success of their Almond Drops skincare range.
Exactly. And it's not just about new products, it's also about expanding their reach.
Right, both domestically and internationally. We've already seen them pushing into international markets,
Yeah.
especially in the Middle East, Africa, and Bangladesh. Where do they see the most potential?
They've highlighted a few key markets like Southeast Asia, also the Middle East and Africa, regions with high growth potential. They're expanding strategically in these areas using both online and offline channels.
So they're going global, capitalizing on that growing demand in emerging markets. But what about their home market here in India? What's their plan for dealing with those challenges they're facing?
Their strategy for India relies on a few things. Revitalizing their general trade performance, for one,
Right.
strengthening their presence in modern trade and e-commerce, and continuing to innovate with products that resonate with Indian consumers.
And we've talked about Project Arahan, their plan to overhaul general trade.
Hmm.
What are some of the key elements of that initiative?
Well, Project Arahan involves expanding their distribution network, for starters, improving the effectiveness of their sales force, and really strengthening their relationships with retailers. They're also investing in technology and data analytics to optimize their supply chain and better understand consumer behavior.
It's like they're not just fixing what's broken, they're building a whole new engine for growth.
That's a great way to put it.
So we've got new products, international expansion, a revitalized general trade strategy. Anything else they've hinted at?
They've talked about their focus on digital transformation, investing in technology and data analytics to improve their operations and enhance customer engagement.
The digital space is definitely key in consumer goods these days. How are they using technology to stay ahead?
They're using data analytics to understand consumer preferences and personalize their marketing, optimize pricing, also leveraging technology to improve supply chain management. And their online presence, create a seamless experience for customers.
It seems like digital transformation is a core part of their growth strategy. But with all these plans, there must be some challenges too. What potential roadblocks might they encounter?
One big challenge is the competition.
Right, it's a tough industry.
It's crowded with big players and new entrants. Everyone wants market share.
So how are they making sure they stand out?
They're focusing on their strength,
Okay.
their strong brand recognition, their understanding of the Indian consumer, and their dedication to innovation. They're also using their legacy as a trusted name to build loyalty.
So a mix of their history and a modern approach.
Exactly. And how well they handle these challenges will determine their long-term success.
It seems like they're aware of the challenges and are taking action. But there's one more thing we need to think about: the economy. How might that affect them?
The economic environment is a huge factor for consumer goods. Things like inflation, consumer confidence, disposable income, all those things have a big impact on spending.
A strong economy helps them, a weak one hurts them.
Exactly. And Bajaj Consumer Care is watching those economic indicators closely to make sure they can adapt.
Business is always tied to those bigger trends. They can make a big difference. So taking everything into account, what's your overall outlook for their future?
Well, there are definitely challenges ahead, but I'm cautiously optimistic.
Okay.
Their commitment to innovation, their strategic investments, and their strong financials put them in a good position.
It's been a fascinating journey exploring their performance, strategies, and what's next for them. We've seen a company facing challenges head-on, embracing opportunities for growth and change.
From declining top lines to water positivity, strategic initiatives, and marketing shifts, the consumer goods world is constantly changing, and Bajaj Consumer Care shows how important it is to adapt, innovate, and be sustainable.
We've uncovered a lot, and hopefully you now have a better understanding of this company. Beyond just the numbers, what stood out to you from our deep dive?
For me, it's how they're balancing those short-term needs with long-term goals. Addressing today's challenges while investing in tomorrow's growth. It's not easy, but they seem to be doing it well.
I agree. And their commitment to sustainability is impressive. They're not just talking, they're actually taking action to make a difference.
Absolutely. It shows that businesses can be both successful and responsible.
Well, as we wrap up, here's a final question for you to think about. Can Bajaj Consumer Care's initiatives, particularly Project Arrowhand and their international expansion, overcome the challenges and get them back to overall growth? Keep an eye on their journey and see what happens. The story's not over yet, and the next chapter will be interesting for sure.
It will
Thanks for joining us on this deep dive. Until next time, happy learning.